Hello and welcome to another MCO market update on Dogecoin. On the Doge chart, the market has reached this target zone for a third wave. A bit short, for not quite reached the 138% extension, but it is absolutely acceptable as a wave 3 because we can identify an A, B, C structure. And that's a 3-wave move in the third wave. After wave 1 was probably also just a 3-wave move. So it's looking like a completed third wave there, even though it ideally would have pushed just a little higher, but it was okay. It reached that target zone I mentioned, not only in the last video, but also in our members area. And it is potentially now working on the fourth wave pullback, like Bitcoin. Now, it is important to keep an overall bullish perspective here on Doge, that this here might turn into a diagonal pattern to the upside. It is important that the Doge chart forms 5 waves up. One more high would be ideal. A 5th wave to the upside to potentially 19.6 cents or better, even 20.6 cents, which is the 161.8 FIB extension. That would indeed be ideal. And at the moment, we seem to be in a pullback, not a surprise. And it is indeed possible we have already started the C wave decline. So one way of looking at this is that we have an A wave down completed in wave 4. This here is somehow a B wave. I mean, I'm not sure if that B wave is already completed. It might be, and then we're heading down in the C wave. That's how I see it. It's possible the B wave extends a bit. It would actually be favorable, because if the B wave extends a bit, there's a better chance that wave C to the downside holds support. Now the question is, what is the main support area? So main support for this fourth wave is between the 61.8 retracement and the 38.2 retracement. I think I mentioned that already in the last video, with an additional level there around the 50% retracement. They're just standard Fibonacci support levels, right? And we know that a fourth wave, if this indeed is the fourth wave of a diagonal, it should not break below that 61.8 retracement. Shouldn't break below the golden ratio level. So the 15.5 cent level must hold. Now careful, the 15.5 cent level is not an invalidation point. Any lower than that will shift the focus to the previous swing low here from the 16th of April. That is where the red line is now positioned, around 15 cents. Typically in these diagonal patterns, I always try to combine that a little bit with an educational moment here, because this is about more than just chart analysis, right? It's also about empowerment, education. So in a diagonal pattern, there are kind of 2 main levels that I'm watching. I mean, if normally Fibonacci support should hold, well, if it doesn't for whatever reason, then we can still watch the B wave low of the third wave. That would be the next level to watch. And I mean, ideally, really, we don't break below that. This would be the second warning if the price breaks below that as well. And I mean, below that, it's typically not a wave 4 anymore. Then that means while it could go lower, it would not be within this scenario anymore. We might then target the 12.6 cent level for another low. But to keep the upside momentum intact, this is the zone to watch. So looking pretty good. That means we are watching for a 5-wave move up once we have all 5 waves completed. We call it a 1-2 setup, and we'll add wave 2 support to the chart. Wave 2 would be a larger correction most likely, which should then find support just based on standard guidelines. It should find support in the area where a previous wave 4 of 1 lesser degree completed. That would be probably where that orange support box is at the moment, but we'll have to see where that fourth wave really forms low. So that's the update on Doge. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.